really, if you look at those headline earnings from your continuing operations, you point out in the commentary 3.64 cents. And of course, you have sold the Opticon business since the end of the first half. So a different business going into the second half, isn't it?
Yes, it's a much more positive business, and all the elements thereof are revenue earning. Opticon has been a bit of a headache for us the last year and a half, and I'm very pleased to have found a buyer for it.
Run us through the rationale for that sale, because there was a stage where Opticon, which had been selling optical devices to the military use, was a nice component that you guys had with exposure to export markets like China and Turkey specifically.
Yes, indeed. It was somewhat of a hedge, because we exported via them about the same amount that we imported for our other businesses. However, we've discovered that thermal imaging products have become a world commodity, like cell phones. You don't make them in small volumes and remain competitive. In recent times, in the last few months, we've discovered that we could land thermal imagers cheaper than we could actually make them. And it became quite clear that we had to divest ourselves of that business.
Well, Alan, despite that sale, you still remain focused on diversifying the business. In fact, it's diversity that has helped you through this, because if you look at that order book, quite a diverse stream of orders lined up for the coming period.
Yes, indeed. We're still active in the defence business via Ansys itself. We build sites. Opticon built the actual cameras for us, and as I said, those we can import. So we're still busy in that. The rail business is vibrant at the moment. Transnet is a very good customer. And the mining business is absolutely vibrant. In the coming 6 months, revenue will start to accrue from our rope tester. This is a device actually for testing the steel cables. There is really significant market there for us that we've only just started. We've sold 8 for 20 million, and there's 2,300 shafts in South Africa. So if you do a present value of that piece of our business, it's something like 8 times more than our market cap. It's a big thing for us, and as I said, the revenue starts to accrue in the coming 6 months.
Alan, your rail business is obviously the cash cow at the moment. How much growth are you seeing both locally and then possibly further afield in Africa? You've obviously got your partnership with Westinghouse and the signaling systems. Is there a lot of opportunities there? And secondly, were you involved in the Gautrain or any of that rail, or is that different kind of business?
The planning for Gautrain commenced before Ansys was actually a rail business. So we've got currently no revenue from Gautrain. But last month we received our first export rail order from Botswana. This is just over 1 million pula, and there's more to come from that. It's true that the Transnet business is our bread and butter, but the key in rail is signalling. As you were aware, you may be aware, PRASA awarded or is tendering for a very big contract for the re-signalling of Gauteng. We were on a short list of 3, but we didn't win. Siemens won, but it's R1 billion of business, and I don't believe they can do it all themselves. So we anticipate a high degree of subcontract from them, and it's very nice when you've been investing in a business in a segment for a long time and the customer starts to spend money. So we're very pleased about that progress, even though we didn't come first.
Where long delayed tenders, Alan, has been somewhat of an Achilles heel for the company in the past. Is it still an issue as you move forward? And just what kind of competition are you facing within that arena?
In the rope tester, the most vibrant part of our business coming forward, we have no local competition. There is some foreign competition, and they were here during the electromining. We did what's called a shootout with the Chinese competition, and we outperformed them 6-0. According to Anglo, ours is the only product that they think that works in the world. So there is competition, but it's vibrant. It adds to the vibrancy of the market. It keeps us on our toes, and we actually enjoy that. The turnaround time for orders in the mining domain is quite quick. I've got no comment, no unhappiness there at all. In the rail domain, it's quite slow, but we're used to it. And it's not as if we're just starting in that domain. We have we've got 150 million of orders on hand, as we said, but We've got even more than that in quotations awaiting to be adjudicated. So once you've created a pipeline, even if it moves slowly, useful revenue does come out at the end.
Well, Nick, Ansys is probably a company that doesn't fall on the radar of most fund managers. It is pretty small, but it looks like they have positioned themselves in quite a lucrative space going forward.
Yeah, look, on the positive side, management hold, I think, about half of the equity, so that's always good when your interests are aligned with your shareholders. But the business has undergone a lot of change recently. Last year was the worst year in financial year that they've ever had, which I think is a sort of quote from Alan. And the business has changed quite fundamentally, so maybe one would expect that. But yes, it's always tough when you've got one big customer, which they'd had, and a lot of governmental work. They're trying to shift that out, but I think it's a tough space to be in. I haven't really seen enough strong financial performance or competitive advantage to.
So you'd want to see more of a track record being built here.
Absolutely. Yeah.
No pun intended with those tracks.
Well, Alan, just looking, I mean, Nick, highlighting for us, the kind of shareholding that your, business has within the company. Are your executives themselves at this stage of the game net buyers or sellers of shares?
No, if you look at the sends, you'll see we've all been buying in recent times. I had to stop in May because we were announced as shortlisted for the Prasa, but from today we can all buy again, so I guess a number of people will buy. We feel the share is so grossly undervalued that maybe delisting would be a possibility, but we enjoy it on the stock exchange. I enjoy the vibrancy. We enjoy being able to talk to our customers in this way and our shareholders, and we have really great hopes for the future. We're past the stage where we had one big customer. We now have three big customers. In the rail space, Transnet's not our biggest customer. GE, South Africa Technologies, is in fact our biggest customer. So we tend to, through this alliance forming, we are engineering partners for some of the big names in the world, like Ansys, who is the new name for Westinghouse, and we're making good revenue out of that.
How about the current 6 months? Have prospects brightened for the full year compared to last year? We've seen that turn around in the first half.
Yes, a big thing to realize is that Ansys is not a linear business. Most of our customers have a year beginning in February or March, and they then take a while to give us the orders, and we tend to execute them then in the second half of the year, and typically we have much more revenue in the second half than in the first half. So if we can be profitable in the first half like we have now, it bodes well for the year end.